Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. Again, coming to you guys live tonight from McDonald's because we don't have internet still at the new house. Actually, I got a call from Comcast today, and hopefully we should have that back up on Wednesday. Crossing my fingers this week that it's in, which is about a week and a half behind schedule. So hopefully these videos will be going out a lot earlier in the evening because I can do them before I have to put my daughter down to bed and then go over to McDonald's and record this. But nevertheless, making sure that I get these out to you guys, as always, on plan. So tonight we're going to go over the closing trades that we had for October 6th, Monday, to kick off the trading week, the two closing trades in APC and HPQ, as well as the vertical adjustment that we had on our Strangle in XOP, where we actually rolled down one side and created a straddle out of this trade. So a really interesting adjustment. We haven't made a straddle in a little while here on the membership side, so this should be a little bit interesting. First thing we're going to go over is APC. We went ahead and bought back our current call spread that we had sold. So as APC was heading lower, implied volatility was much higher. We anticipated that the stock would at least continue lower and or implied volatility would drop. Well, we got one of those two things to happen and really had a lot of the premium kind of sucked out of this thing ahead of time. We sold these for about 50 cents a piece, these 110, 113 call spreads, and bought them back today for about 10 cents, which is about as cheap as they're going to get until kind of the last week of expiration. So I don't want to run the risk of holding these and seeing the market turn around. This is giving us a good opportunity to take some money off the table as the market heads down. We're going to use this time now to bank some of these profits like ones on APC. So take a look at the chart here. I believe we sold this back around expiration for September in that area. And again, the stock did move down, which was great. Had a nice move down in the stock. But unfortunately, implied volatility didn't drop that fast. It was okay, but if implied volatility had dropped, we would have had a much quicker realization of this profit than we did. It took a little while for this profit to materialize, even though the stock went completely in the direction that we wanted it to go. So at least at this point, APC is still on our kind of calendar and target for next month for November options, but they do have earnings in the middle of the month. So we're going to kind of wait until we get closer to that earnings period, see where the stock goes. It's a very fast-moving stock. It's very deceiving because it doesn't look like it moves fast, but it's actually a fairly fast-moving, trending stock. So we definitely don't want to get ahead of ourselves with earnings, but it is on our radar to make an earnings trade on when we get to that point. The other trade that we got out today is our put calendar in HPQ. So HPQ announced today that they were actually splitting the company into two parts. And the details don't even really matter, but at least at this point, the stock rallied on the news because they could get more money by splitting off the company into two parts. I don't really subscribe to that. I think the company's worth what the company's worth, separate or not. But it is what it is. The stock rallied. There's really not too much of a chance here since this calendar. Again, we focus on that front month, which is October. Even though we're long November options in HPQ, we always want to focus on those calendars on that front month option and what happens between now and that front month. So since we're playing these on the October month, there's really not too much that's going to happen, I think, with the stock in the next 11 days that we have left in the calendar month before expiration. So at this point, it was just prudent just to close out the trade, get whatever you can get for it. We got a 17-cent credit. I know it was trading around 18 cents, 19 cents today, but we took a $40 loss on that. So again, kind of offset a little bit. Overall, we were up about $40 on the day, which is not too great, not too bad. It was just slightly up on the day. Again, with HPQ, had a nice little rally today and kind of popped higher on the news that was splitting. I don't necessarily think that it's going to stay up there. I think it could come back down, but remember, we need it to be around 34 by expiration in October, so it needs to drop dramatically in the next 11 days. I just don't see that happening, and so rather than let this thing completely waste away, I wanted to actually just go ahead and close it out, remove the position from the portfolio. We can establish new positions, but it's basically a scratch. All right, so the last one that we want to go over tonight is the adjustment that we did to XOP. So we originally traded this XOP wide straddle. This is our second adjustment that we've made to XOP now. So we've banked a profit on one adjustment, banking another profit on this one, continuing to add to this credit bank that we're building at XOP, which helps widen out the break-evens on this straddle. So what we did today is via a vertical call spread, like we've done many times before, and you can go back, for those of you who are new this week, go back and look at other videos. We do this a lot. But via a vertical call spread, we rolled down our call side from 70. So we bought the 70s, closed those out, and reestablished a new short premium at the 67 strike on the call side. So again, with the vertical call spread, we sold the 67s, bought the 70s. The net effect of the buying and selling was a 50-cent credit on each of those. So we took in an extra $100 of credit. That helps widen out the break evens another 50 cents on either end from what we've already accumulated here. But now what we basically have with XOP is a straddle right at 67. So we're kind of pinning everything on XOP around 67. Now, XOP is definitely one of those ones, since it's an oil and gas ETF, it can move very, very quick. So it was down on the day, but it can very easily get back up to 67 or even 68. You could see it rally back up to 68 because there's really not much standing in its way until about 68.5, 69 as far as support and resistance. So I think it's very feasible that we could see a move back up into the range that we need it to be. So I'm not too concerned right now because we still got some time left between now and expiration. If we go to the Analyze tab, you guys can see what our new position looks like in XOP. Let me take off this simulated trade because that shouldn't be there anymore since we made the trade. But here's our new position in XOP, and you can see it's that straddle right over the market at 67. The break-evens with these strikes bring us down actually about 65.5 and about 68.5. Now again, this doesn't take into account what we've already kind of banked on these other two rolls and profits. And so I think we've banked almost about $1 on the other two rolls. I think it was like 89, 92 cents, something like that. So we can actually move those out about another 89 or 90 cents on either end. And what you find is that we're actually kind of already encompassing this new market price with today's adjustment after we factor in all of the credits that we receive. Now, of course, it'd be best if XOP were to close right at 67, right? I mean, that would be the ideal situation. It's probably not going to happen, and it rarely ever closes on a round number like that right at expiration. So we definitely wanted to see XOP rally up higher, but if it does continue to move lower, then we'll just go ahead and adjust this call side down even more. So we'll roll down that call side, and that will move out this break-even point on the bottom side of our trade. As we bank profits on the back side, we'll take a profit on this call spread that we just sold, take that profit, and roll that to a closer strike, taking in more credit, moving out the break-even again, just moving with the market and making those adjustments with the market. So I still like this trade. We're doing it very small. It's only a 2-lot on either side, so it's not a huge winner loser. It's going to be a very small trade for us, but it is a very good example of how you can adjust and manage positions through expiration. This also might be one if we get closer to October, since implied volatility is already so high, it's up at the 100th percentile. We might want to take advantage of this and actually roll this thing out to November, if nothing other than just taking advantage of the fact that there's high implied volatility and high premium. We might be able to get a lot more premium in November. Again, just widen out the base of this strangle and straddle and give us a better opportunity to make some money. So we'll see what happens then over the next couple of days. If XOP has a nice little rally, then we might just hold still. If it does fall a little bit, then we might just roll the whole thing out to November, just give ourselves a little bit more time and duration to be right in the trade. So as always, hope you guys enjoy these videos. If you have any comments or questions, please ask them right below this video. If you're watching this video somewhere else on YouTube or somewhere else out there online, you just have to understand that you're actually getting this video and some of these alerts right here about 15 days after they go out to just our members. So if you want these trading alerts live during the day and this video every single night that goes over all the trades, you got to sign up at optionalpha.com. Go ahead and start our free trial there. Kick the tires. See if this is something that can make you a smarter trader. Until next time, happy trading.